What if I told you that the worst economic decade in modern American history holds the blueprint for building unstoppable wealth today? Picture this. It's 1979.
You walk into a grocery store with a $20 bill, and you can barely fill half a shopping bag. Gas prices have tripled. Your savings account is bleeding value every single day. The American dream feels like it's slipping through everyone's fingers. Sound familiar? That was the 1970s. Double-digit inflation. Oil shocks. Economic chaos. But here's the plot twist that nobody talks about. While most Americans watched their wealth evaporate, a small group of investors figured out the code. They didn't just survive the 1970s, they thrived. And today, I'm going to show you exactly how they did it, and how you can apply these same strategies right now. Hey everyone, welcome back to the channel. If you're new here, I'm Robbie, and this channel premium user is all about building real, lasting wealth using lessons from history, economics, and the strategies that actually work. Today, we're diving deep into one of the most misunderstood periods in American economic history. The 1970s wasn't just about disco and bell-bottoms. It was a masterclass in what happens when inflation runs wild, and more importantly, how smart investors positioned themselves to not just survive, but to build generational wealth. Now, before we jump in, if you find value in this video, do me a favor, hit that like button and subscribe. Let's get into it. First, we need to understand just how bad things got in the 1970s. Because if you don't understand the problem, you can't appreciate the solution. In 1970, the average American family could buy a home for about $23,000. By 1980, that same home cost $68,000. That's a nearly 200% increase in just one decade. Gasoline went from 36 cents per gallon to over $1. A loaf of bread that cost 25 cents in 1970 cost 50 cents by 1980. But here's what really crushed people. Inflation peaked at over 13% in 1980. Think about what that means for a moment. If you had $10,000 sitting in a regular savings account, you were losing $1,300 in purchasing power every single year. Your money was literally rotting in the bank. The stock market, absolutely brutal. From 1970 to 1980, if you invested in the S&P 500, you got basically nowhere after adjusting for inflation. The Dow Jones Industrial Average started the decade around 800 and ended at around 950, but when you factor in that massive inflation, real returns were negative. This wasn't a recession. This was stagflation. High inflation combined with stagnant economic growth and high unemployment. It broke all the rules economists thought they understood. The Federal Reserve didn't know what to do. Presidents came and went without solving the problem. For the average American family, it felt like financial quicksand. Work harder, earn more money, and somehow still feel like you're falling behind. The middle class was being hollowed out in real time. But remember what I said at the beginning. Some people won during this chaos. Let's talk about how. The first lesson from the 1970s is simple but powerful. When paper money loses value, hard assets explode in value. Let's start with the most dramatic example, gold. In January 1970, gold was trading at about $35 per ounce. By January 1980, it had rocketed to $850 per ounce. That's a 2,300% return. If you had invested just $5,000 in gold at the start of the decade, you'd have had over $121,000 by the end. That's not adjusting for anything. That's pure, life-changing gains. But it wasn't just gold. Silver went from less than $2 an ounce to over $40. Real estate, despite the economic chaos, became one of the most powerful wealth-building tools of the era. Why? Because mortgage rates might have been high, but if you locked in a property, inflation was basically paying down your debt for you in real terms. Here's what was happening. People figured out that holding cash was financial suicide. So they moved their money into things that couldn't be printed. Things with intrinsic value. Things that couldn't be inflated away by government policy. The wealthy bought farmland. They bought rental properties. They bought precious metals. They invested in commodities like oil and agricultural products. These weren't speculative plays. They were survival strategies that happened to make people wealthy. Now, fast forward to today. We're seeing echoes of the 1970s everywhere. Are hard assets important again? Absolutely. But here's the critical nuance. You can't just blindly buy gold or real estate and expect magic to happen. You need to understand why these assets protect you and how to position yourself strategically. Gold and precious metals act as insurance against currency debasement. When governments print money aggressively, precious metals tend to preserve purchasing power. But they don't produce cash flow. They don't compound. They're protection, not growth engines. Real estate, on the other hand, gives you both. In an inflationary environment, rents tend to rise with inflation. If you have a fixed-rate mortgage, your debt burden gets easier over time in real terms while your asset appreciates. That's a double win. The investors who thrived in the 1970s understood this distinction. They didn't put all their eggs in one basket. They built a portfolio of hard assets that work together. The lesson for us today: diversify into hard assets, but do it intelligently.